There is a range of factors that distinguish trading and speculating with CFDs on metals from investing in them or trading them as deliverable assets. Here we'll explain 3 keys to unlocking CFDs on metals with a focus on gold. Intraday volatility for gold is greater than most other CFDs that are very widely traded. It's fairly common to see sudden, large movements on lower timeframes. This can be good and bad. Some amount of volatility is necessary to trade, and high volatility can bring more opportunities and larger profits per trade if a trader is skilled and knows how to exploit it. Volatility can also generate problems and risks for traders though. These might include slower execution and the possibility of receiving worse prices. These risks are reduced when you trade with Exness. We strive to minimise potential slippage for nearly all pending orders except during gaps. For gaps, Exness's gap level regulation can protect traders from having pending orders triggered at disadvantageous prices. The rule states that if the first price after a gap is equal to or less than the gap level for an instrument, the trader receives the price they requested. Traders can take advantage of these conditions to enter more reliably at specific prices using pending orders. Sentiment is important in any financial market, but particularly so for gold. One of the best ways to track significant changes in sentiment is to use data from the Commodity Futures Trading Commission's weekly report, the Commitment of Traders, or COT for short. Various websites feature visual plotting of the figures from the COT on charts. Traders can use these to identify quickly how the net totals of positions change and consider their own positions. If there's a crossover between large speculators in green and commercial traders in red, you have a very strong signal that the trend is about to change, or that a new, powerful trend is about to start. A particularly strong buy signal is when the net positions of commercial traders become positive. A really clear signal like this is rare, but even relatively small changes in the COT from week to week can give traders useful additional information beyond just news and what the charts are saying. In general, gold is widely known for its sharp movements in both directions, so managing risk is particularly important for traders of this instrument. It can be more important for gold than many other instruments to modify stops and targets as the situation changes. On the other hand, and unlike other instruments that tend to be more volatile, gold's high liquidity can make its technical structure relatively easy to read. This can be an advantage for day traders because it can be clearer when you should expect a significant movement and how long such a movement could continue. Equally, the higher value of intraday movements compared to most forex pairs makes gold very attractive for short-term traders. Exness's range of platforms on desktop, web and mobile make managing risk more convenient than ever before. You can use any or all of the platforms available to set and modify stops and targets anywhere you have a connection to the internet. Furthermore, Exness Trader comes with a range of technical tools like indicators built in, so you can conduct technical analysis and monitor all the latest news from one application on the move, potentially saving a lot of time and effort.